Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Monday, and it's July 29th. Hope you guys enjoyed your weekend. This week, we got a pretty big week in terms of a lot of data coming out and a lot of activities happening. Today, however, we have no economic data to report on the calendar here. However, tomorrow will be kind of the start of all that. So let's kind of jump ahead here to the headline news. And I also want to kind of touch on what's on the week ahead to plan so you can be prepared for if you guys are any transactions here. So today we don't have any data to report. However, tomorrow we get the PCE report, which is the personal consumption expenditure. When you remove out this is a wholesale on the inflationary level, and when you remove the food and energy, we get what they call the core PCE or also the core inflation. This is the Fed's favorite gauge for inflation. This data tomorrow will be very important, primarily because the Fed is expected to meet tomorrow and then have their announcement on Wednesday, which they're expected to announce their first rate cut since they started raising this last 2-3 years. Now that's important primarily because if the Fed is cutting rates and we have a spike in inflation, that's not going to be too well received, primarily because the reason that the Fed raises interest rates to begin with is to stave off inflation. And if we're going the opposite direction and letting inflation get out of control, this would pose as obviously it would have a negative reaction in the markets here. Now, obviously, we want the best scenario for us would be is the Fed cut the rates, which is almost 100%, and the markets are pricing at pretty much 100% in their pricing currently. If they cut it and we have a weaker PCE. Now, weaker PCE may not occur because the last report we had with the CPI and the PPI both had an increase of 0.1%. But if we can at least keep it sideways pattern as maybe unchanged, that might help us out here. So be very cautious coming into this week. We got also tomorrow we got the China, where will be our first face-to-face meeting with China with the U.S. representatives. We'll have Lighthizer as well as Steve Mnuchin meeting their counterparts in China. It'll be the first meeting since we had since they reconvened, and the G20 meetings with President Trump and President Xi, their president as well. So, anyways, that we got a lot of different things that could play a role this week. We got some important data in terms of housing. We got the PCE tomorrow. We got jobs numbers will be reported. Jobs reporters will have the ADP on Wednesday. We'll have the initial jobless claims on Thursday, and then Friday the big one will be the Bureau of Labor Statistics. So a lot of things could play a big role, and we could have a really topsy-turvy week this week that could really kind of move things around. But the big one, of course, would be tomorrow with the PCE. And another item that could play a role into it is we got the Employment Cost Index. That's another item that the Fed will look at. This was Greenspan's favorite gauge for inflation because this could show if wages are growing at a rapid pace. It could be a wage-based inflation. So that's something else that they will be viewing as well. So be cautious. Again, going forward this week, we could have a very much a roller coaster week this week. Let's see how this is playing on the bond market. Bond market started this morning up a little bit higher. Now it's at the Fibonacci down 3 basis points. So that translates to no price changes. We're same as what we left off on Friday. As you see, we did touch the 25-day moving average, but we closed just above the Fibonacci level on Friday. And again, we're kind of we've been in this sideways pattern here for a little while here. And here are the yields, same thing. We're down about two basis points, which brings us down to about 206. As you can see here, we did touch off the 25-day moving average, and so we're sitting here at 206 level here on the yields. All right, again, so a lot of volatility this week. Be cautious, and today we're kind of going the sideways pattern, and the market is basically there's no change in mortgage rates today. Now, if you guys are looking to buy or refinance, please go ahead and direct message me. I'd love to be able to talk to you about your scenario. I am a loan officer, and my company does offer loans in all 50 states. I am a company I work for is CMG Financial, and we do offer 2 proprietary products, which is the all-in-one loan product on top of the home funded. All-in-one is a great loan program that helps people to pay off the mortgage much quicker. People with cash flow that could dramatically improve themselves and allow them the flexibility to sustain everything that they're doing. And then Home Fund is also another down payment program to help out a lot of different people, from what you could use as a wedding registry to first-time home buyers to people who have a life-changing event like wildfires, hurricanes, stuff like that, to divorce situations. So two loan programs that benefits a lot of different people. On top of having our jumbo loan programs, our conventional loan programs dealing with both Fannie and Freddie, FHA, VA, USDA, and we also carry niche loans. This can also help us differentiate ourselves from a lot of other lenders out there that do not offer these. We got loans specifically only for real estate investors. We got loans for bank statements that are very good for the self-employed borrowers, and we got foreign national loans. So if somebody's a foreign national, want to buy out here, we can help them out as well. Again, please feel free to direct message me, and that's the best way to contact me, and I'll be more than happy to reach out to you and see how I can help you guys out. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.